Hey everybody, this is John. Welcome to the free video. First, I want to take a look at Hood and just kind of give you an example. Remember, this is about patterns. It's easy to get attached to a particular stock, but we want to understand patterns and psychology. So here, for the first week or so, it looked pretty good, and then we kind of started to fall. We bounced off the 21 EMA. We closed below it. We bounced above, closed below it. But just kind of notice here that once especially once you start testing the 89 EMA, it's kind of over, unless you're able to take out the prior swing high. So here, yeah, we get a little bit of a rally and then death and death and death. And it's important to see this because, it may seem like, especially if you bought it at 70 and you keep averaging down and averaging down, that it may seem like, oh, this thing is of course going to take this out. The stocks can go to zero, and I don't think Robinhood's going to zero, but for various reasons, when they come to market already with an incredibly high market cap, okay? You remember when Microsoft went public, they went public at $780 million in market cap, okay? And today they're a $1 trillion company. That's a huge move. A lot of companies today are coming public, and I forgot what the market cap of Hood was when it came public, like 20, 30, 40 billion dollars. That's already a lot of value baked into that, and if they can't deliver on that, it kind of resets that. And so I think it's just important to understand, just the path of least resistance and a lot of the stuff. And same goes for a stock like Zoom. It had its moment, and it had its moment because of an acceleration of earnings growth that took place in 2020. Okay, and we can see that clearly here, where we all remember 2020 and it's like, oh my God, everybody's using Zoom, and this was the stock to trade, and it was great. I mean, this thing went from, this was trading at $60 here, and when it threw 500, almost straight up, like you couldn't lose money on this, and then what happened. Okay, and I think a chart like this is so important to study and understand. Okay, what's the difference between the pullback that's buyable, okay, versus the pullback that's the beginning of the end. Okay, and a lot of that has to do with falling volume. So you can see here that the for most of this run up, except when we're consolidating here, volume was above average. And then volume just kind of tanked. And if you don't have gas in the tank, the car ain't gonna make it up the hill, so to speak. So that's a first sign. And from there, and it's more and it's more pronounced and more violent, frankly, on a daily chart. So if we go on and and you look at this, and you can just kind of see that plunge and just bam, bam, bam. But it's important to look. It's important to understand what continuous selling looks like, because it's going to happen to a stock that you own. It's going to happen to a stock that you like, and you want to just kind of be prepared for that and not get caught into something like this, because it's easy to wake up and say, oh my God, what happened? And so I'm bringing this up because we're seeing a lot of there's stocks here that are doing great, but there's also and if we look at the indexes here, the indexes are holding up, but we're in a situation right now where the indexes are holding up largely because the biggest stocks are doing okay, but there's a lot of stocks under the hood, no pun intended, that are not doing okay, and at some point that'll start to impact the indexes. And I don't think it's going to happen anytime soon. I think we're going to get the Santa Claus rally. I think we rally at the end of the year, but I think in January we want to be careful and just look for the signs. Not only on individual stocks that are losing quarter by quarter growth accelerations, they're going to be great shorts, but also be cautious on the indexes as well. So my mode in this particular market is just follow the pretty colors. So what does that mean? Tesla, we took profits today on Tesla. We bought the call debit spreads. They hit our target, and we were out this morning near the highs, which was great. And then we got a chance to load back up again. So when it hit the mean. So what I mean by following the pretty colors is that, look, we got green 10x bars. It's bullish. The moving averages are stacked positive. You buy the pullback to the 21 EMA, even though it may seem scary. Okay, in this kind of a stock, you buy the pullback. You follow the pretty colors. Versus something like we're talking about with Hood and stuff like that too. So I think this is going to be a fascinating, of course, couple of weeks. We've got to get, Thanksgiving. This is a shortened week. I've got a lot more to cover in the premium video. We need to cover gold and take a look at the dollar and inflation and CME and a couple of stocks there. But hopefully this kind of gives you enough to kind of get some sense of how to manage these stocks going forward. All right. Have a good one, and we'll see you at the next up.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.